So now coming back from the weekend, this new weekly candle seems to be bearish to start the week. So if we look at it daily, today we've tested the high, failed to break the high, and now we're pushing lower, trying to find the low. Right. So when we look at that on an hourly scale, we can see how it's looking bearish over the last few hours, right? So we can see the high was put in earlier, and as of late, we've been pulling away from that high, and we're almost at our break even. The idea is to find a way to survive, and having survived the events of last week, all of this right here, and I've been made money in this environment. Now we're ready to go and maybe retest a lower low. All right, so 830 would be the first stop. If we make it below 830, the second stop would be somewhere around 760 or so, right around here. Right? But we have to get to the first one first. Right? The inability to go higher as of now is what we're using as our clue, right? So this might come into play later in the week, right? Later in the week. So I'm thinking we go down before we go up. Similar to what happened here, 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 right? So we're just looking for balancing this out, right? Maybe giving back some of this, maybe giving back a little bit more before we go slightly higher, right? If you look at the bigger picture, it looks bullish, but we have to take it one day at a time. And right now, today, our one day at a time, it's calling for bearishness, right? So if we look at this now on a 5-minute scale and we start highlighting, where we think the ladder needs to be. First, we have to create our floor, we have to create our ceiling, we have to create the environment that we can test, within a few minutes. So do we think we're going to break this line and go higher? Or do we think we're going to bounce off of this line and retest the low? Right? So that's the kind of mindset. Now that you have this one or the other mindset, you need to play that on your 1-minute chart using your 1-minute boxes. Let's go find a box from days ago. Let's make sure it's the right box, the right size. All right. Oops, a little shy. That might be a little bit too big, actually. Let's see. That's closer. Okay, so we've moved 1, 2, 3. We're in box number 3 off of the high, right? So this might be a good place for a little bit of a pullback, which I want to sell into, right? And the idea is to sell for 2 pips, 2 pips, 2 pips. I've already got this great big position. I've already got a swing trade built, right, over the last few days. So let's show this viewing option position, and I'll show the order right up there. That's our hedge trade. We've built a range. We've positioned ourselves throughout the entire range over the last week or so. The Thanksgiving week was all about the euro, right? So the euro just did its own thing without impediment, without somebody pushing back on it. And so we created this range, this position within the range. I'm looking for lower low, right? And so day by day, I'll continue to play 3 pips, 3 pips while this plays out. right? The key is the high. The high was set at a 61% retracement. And understanding what that means is really the key to this position right here, right? I'm exploiting that 61%. That defines my risk, right? That defines where I'm wrong and where that hedge trade kicks in. When we started back here, those swing trades were supposed to go all the way to the target without this leg back up, right? So this is what has created a bigger swing position than anticipated, but it's also allowed us to survive. It's also allowed us to make money daily, right? So the account has continued to grow even though we've accrued in drawdown, right? So out of $1,000 account with profits, the drawdown is still not chewing into our capital, right? It's only eating up the house money that we've been using to trade. And so we haven't really lost anything. We've just wasted a bunch of time last Wednesday, Thursday, Friday, right? So now everybody's back to work. The Thanksgiving holidays, complete. Bearish is probably the higher probability versus bullishness, right? So that's what we've positioned for. Now I'm going to be trading for 3 pips, 3 pips, 3 pips as I see fit, right? And I'm still allowed percentages per box. I'm still managing. I need to limit my risk. I need to know where I'm wrong and why I'm wrong at that particular level. I just took a trade because I'm at resistance within my box right here. Right, so I'm selling this resistance right here, and I'm only trying to make 3 pips. There's the target to that trade, right? Very, very shallow target. Right, I just want to continue to make small, profitable trades, not trying to break the bank. I want to see this position through. Ultimately, maybe tomorrow or Wednesday. Right, there is important news this week, later in the week, and there are speakers scheduled from both sides, right? From the Euro side of things, and I think we have speakers also on the Fed side. So we have to anticipate volatility, but we also have a position that's built expecting that 61% to hold. Right? So when we go down to our 5 minutes, our ladder, sorry, our ladder is holding up, right? We can even put a line right smack in the middle and put a wrong right in the middle here and let price dictate what it's trying to do, right? Is it trying to bounce off of this line and go up? Or are we going to, like so, are we going to sell at the upper line? Right? That might be what I end up doing. Right, so I just have 2 open trades now. I'm not really looking to close that swing trade until I get to 830 or so, right, which is previous support. And the reason why I'm looking at that is because of that bigger time horizon, right? The daily chart, the weekly chart. This is the beginning of the week, the beginning of a new week, the last week of the month. And considering I expect this week to finish higher, that means it would make sense to start from a lower low, right? So nobody knows the future, but we can see from the last couple of months that the US news that comes out, the CPI, the PPI, that kind of stuff, it's been slowly slipping in the wrong direction, right? So if you look at the dollar index, it is looking kind of weak. And so we're going to play off of that, right? But first, we need to see these shorts close at support. And then on the way down, somewhere around here, maybe tomorrow or Wednesday or even Thursday, we might be buying, right? Buying at support. And then if we go to that bigger time frame and look to see where that support comes in, you'll see it's a Fibonacci. right? That 830 there is a Fibonacci number. So let's just go take a look at that. Right. And so here's the 38%. This is the 23%. And then we have the 50 and then the 61. Right. So I want to see what happens here, even though I have the targets a little further down. Okay, so we're still in box one. We haven't closed any trades in profit today, but that should happen any second. Let's just recreate the box, set it up, and see if we can slide into it. Awesome, awesome. All right, so ideally you can trade bullish or bearish, but understand that over time, if you're trying to carry drawdown like what I'm building here, what I'm attempting to build, you have to have the willingness to take on the heat, right? You're entering an arena where the swings are now bigger, the money is bigger, and you have to hold on. You really just buckle up. And it's the swing trade aspect is the anxiety piece, right? It's what can happen while I'm holding on to this. When we're making 3-pip trades, we're really not exploiting that psychology. We're not fearful of time the same way we are with swing trades. And I think that's to our benefit, right? When I'm swing trading, when I'm building positions like this, it's it it's hard to sleep well. It's hard to understand. It's hard to see uh, into the future. So it's difficult. You have to have resolve, is what I'm getting at. You have to have the conviction into your trade. You have to know where you're wrong, and you have to have a plan, an exit strategy, a way out of this mess if this becomes a mess, right? But it's this plan B. Because you have plan B, because you have plan C, you have alternatives where nobody else tends to even look at that, right? They rely on their plan A and only plan A. And so when we have these times when our plan is working, but it's taking longer than expected, our skill set allows us to sit back and appreciate the fact that it's working, but not as scheduled. When everybody else is panicked, we're more relaxed, we're more appreciative of time, right? Time is on our side. And because we appreciate it, we know it exists, right? The x-axis is there. I kind of understand what an average move looks like in size, but in the number of bars too, right? So if you track the average number of bars, right, per move, you're just giving yourself a ballpark. You're entering an arena where people are pushing the envelope and you're actually willing to sell it to them or buy it from them, and so it's the edge, right on the edge. When people start to panic, we deliver results, right? In this environment right here, a lot of people will see this as a breakout, right? Oh, it's going up, it's going up. In reality, it's only going to resistance. And this is when we profit, right? We sell it to them. So it's understanding what you're here for and who's your customer. Right. So I'm taking a trade in box number 2 right here, right? Trying to not go crazy because I already have a hefty percentage of my account set up in swing trades. All right, so let's go take a look at this real quick. All right, so we've been above, we've been below, We haven't lost anything, right? The account keeps growing, but the drawdown is fluctuating, right? You can see the drawdown is fluctuating, right? Our equity has never dropped below 1,000. So that's important because in the way we operate, it's all about the win rate, the managing of the wins. That's you executing your process. The managing of the losses is you gaining experience, you gaining skill, you gaining, you know, perspective. Uh, it's the loss side that will take the months and the years of practice. Yeah. So yeah, it's the psychology of trading, and it does. It's a one of a kind field, right? It does play a huge role in what we're trying to do, and most people avoid it or ignore it or think it doesn't exist until you see this as your calling. You'll understand the value of the psychology piece, and then when you see it for what it is, you'll seek to fix it. I can only tell you guys to talk to yourselves positively. uh, right? So pulling back, time of day, that's exactly what we would expect to see, right? So we come in on schedule right around 8 a.m. my time. By 8:30 or so, we've experienced a pullback. Typically, it's a bull or bear pullback, depending on the trend that you're in. If you take part in that pullback, you're basically building a position. Ultimately, you're looking to exploit the outcome of the pullback, right? So this is a pullback, and we want to sell this pullback, right? So that we can profit from the outcome. And then according to the, you know, calendar or the circadian nature of the market, at the top of the hour, we would expect some kind of flow to come through, right? Some kind of volatility induced by the banks, right? It's the banks generating, orders to close their books. They're balancing their books. They're starting to lock in the rates for tomorrow. Right, so we just closed the trade in profit. We just made $1 something. Let's sell that again. Right, and I'm only selling because of what I see right here. Right, so we're pushing green into this resistance area right there. You can see the trade that closed already. I'm just trying to repeat the same trade. Right, so if it pushes up, I sell it. If it comes back down, I make my money. All right, I'll sell that again. Right, so I'm trying to sell expensive. Right, when things are expensive is when we take the trade. Right, expensive is a relative term. You have to see it in context, right? We want to sell when it's at resistance. No, not when it's pushing away, but when it's pushing into it. If you follow anyone on Twitter or other YouTubers and stuff like that, a lot of people, as we speak, are bearish the U.S. dollar. If you look at the dollar index, it makes sense to be bearish the US dollar, but you have to take things into context, right? Thanksgiving leads to Christmas, consumerism, you know, endless credit, all this kind of stuff. So uh, don't lose faith on the US dollar just yet, right? Don't think the euro is going to the moon. This is the perspective we have to keep. The euro may look like it's trying to go to 1.1. It may be going to 1.1, but it's doing it with an anchor, an anchor. It's holding on to this anchor called the US dollar, right? It can't go to the moon because the US dollar is kind of a little bit stronger. Right? So this is why we monitor the news. And over the last few months, we've noticed the news has been slipping, right? So the idea is we know not to fight this, but at the same time, the trend is kind of reached its peak. So we think, right? The rest of the world think this is going up and up and up and up and up and up and up. We know it's reached 61%. We know there's limits to this. And if you look to the big picture, on the daily scale, actually, let's go do that real quick. We're at major resistance right here. Oops. All of this stuff here, right? Good luck trying to go to the moon with this. Right. So this is what we're faced with, and I think that's what's reacting today. Right. We may be going up, but we have to break through all of that stuff I just showed you. Right. So when we go back to our hourly approach, and we're only here for a couple hours, what would the next couple hours look like? Right. So if I'm showing up just right here, right now, and I see this as a pullback, well, I want to sell this. Right. I want to sell this pullback. And so on the 5-minute chart on our ladder, oops, 5 minutes, we've broken the top of the ladder, right? So now where's our next rung? Right, somewhere in this area here, right? We're just looking at the vicinity. There we go. This looks good. Maybe move it down a little bit, something like that. Boom, boom. Right. So it's just a decision point. It's for us to have a point of reference like the north on your compass, and then once you get there or you don't get there, you have a action to do. You have something to ask yourself, something to react to. So we've closed a couple more trades. Right. If I zoom in, you can see them here. Let's try that again. Right, so now I'm in this box. Actually, if I reset the box and put it right on the corner, I'm almost at the bottom, right? There we go. Slowly but surely. I'm waiting to see a green candle. If I could sell more, Wednesday and Thursday, we would be somewhere near support. So, yeah, in the big scheme of things, find your floor, find your ceiling on all the time frames that you look at. Right. So it doesn't matter if you pick the 2-hour chart or the 4-hour chart or the 1-hour chart. Just know the floor, know the ceiling, and then ask yourself the same question over and over and over. Which direction am I moving? And then trade that direction. If it's in line with your bias, it's less risk. If you're going against your bias, go half size, right? Or don't take the trade at all. This is what I tend to do, right? I try to not go against the grain. There'll be days when I'll do it because I'm only here for 2 hours and that's what's in front of me. All right. But when I have a swing trade and the swing trade was postponed / delayed by 2 days, 3 days, thanks to Thanksgiving, I don't give up on the outcome. I just have to allow more time to the outcome. Right. So ultimately, we're right. It's just not as fast as we thought it should be. And so if I can see green here, I'll sell it again. right? So we're learning to manage time. Everybody else is learning to manage price only, right? So we have this added variable. You have to allow for that variable, you know. Sometimes it's to your benefit, right? Sell when things are expensive, buy when things are cheap. If you do that on any time frame, you're no longer falling prey to fear of missing out. Right? That's where we all screw up. Everybody ends up chasing something at some point. This is how you step away from that behavior, right? Instead of chasing things at the very top, thinking it's going higher and higher, sell it up there, right? Sell when it's expensive. And so if it does go slightly higher, in our case, we want to sell a little bit more, right? We're building a position. It's not one trade must deliver one outcome, right? This is the average of many, many trades that delivers one outcome, right? It's the average of many, many trades. Some of my trades are losers, some of my trades are winners. The average of all my work makes me consistently win, right? We're up to 67 now. What's this look like on the day? Right, 230 pips on the long side, 175 pips on the short side. Right, altogether, the account's moving, and it's moving in the right direction. How you size up what your pips are worth to you and your account, that's up to your, you know, your own personal situation. The way we make pips is consistent. It's the same for all of us. Right? So if you limit yourself to 1% per box and you don't go overboard with your boxes and your 1%, a day will come when you lose that box or two boxes or three boxes. But because you now get back on the same horse and you continue to trade the same way, you can recover that loss. Right? It's a max loss. It's not an unknown. All right, so here we are closing trades. If I can see green, I'll reopen the same trade again. I just closed a couple more. That blue line is from last week. I can take that away. I don't really need that there. Objects list. Where's my objects manager? Sorry, it opened on the opposite window. I'll just create a new box because I got rid of it. There's 51 by 5. There's 62 by 8. That's close enough. 61 by 8. Good. Right, so if I can see a green candle in here, or in this, in this environment right around here, somewhere near resistance, that would be a good place to sell. This right there would be a good place to sell. This right here, in this zone right up at there, would be a good place to sell. Right, so I'm just planning where I want to take more trades, right? So I already have the money allocated. I just need to see the opportunities, and I've created plan A, B, C. I understand where I'm willing to click my money away, right? And it's ideally because the outcome is favorable to me. It's not a wishy-washy, it's not 50-50, it's 90%, otherwise that trade doesn't happen, right? So I'm selling at resistance because there's a really, really high probability that it goes down, right? Otherwise, I would not take that trade, i.e., the probability is the overall direction, right? That's in my favor. That's what I'm exploiting, right? So we've had some winning trades today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right, that's kind of important. There's that green candle I want to sell, right? And if I get to the top of the box, I'll sell two right there. And so now I'm hoping to repeat similar process, right? See the market pull back, pay me out, and then repeat the same trades if I can. And if we look right now, the average bar is 2.6, a little under my expectations. It should be somewhere closer to 3 or 4. It could be the lack of news, the return from Thanksgiving, that kind of stuff. On a 5-minute chart, the average bar is only 5 pips. So somewhere around 8:30 in down here, 8:30 or so would be a good place to become a buyer. And the reason why I say 8:30 is a Fibonacci number. It's also previous support and so on and so forth. Right. So there's a lot of reasons to expect this right here to hold. And then if it does hold, we'll have built our position and we'll be ready to retest the high if it is going to go up, right? But it's this idea of not playing ping pong. We need to know if it's ping or pong, and then we need to know ahead of schedule, ahead of the crowd, where we will do what, right? So I know where I want to be a seller, or sorry, I know where I want to be a buyer. Until then, I'm a seller, right? Just as we're pushing up into this zone that we've already highlighted, right? We already know we want to be taking a click near there. You don't have unlimited money, right? You don't have unlimited clicks. So you have to kind of have a plan, know where to click before you're forced into it. This is the good place to sell, right around here, right? We see that resistance right there. And if you sell when things are expensive, you tend to make your money a lot quicker, right? We saw that. That was our bias when we looked at the daily, right? We saw the market's inability to make a higher high. All right, so we saw the higher high, but we saw the market's inability to push it and turn red instead. So we've been selling this red candle. We're not here for the entire daily candle. And so we look at it on an hourly scale and we know why we want to sell. And now we're trying to figure out, ooh, where's a good place to sell into this? And so we've participated between these two action points here, right? So that's the area we've built our shorts into. The goal now is to see this through, right? Without over clicking, without over trading, without overspending. You just want to see what you've built pay off. And the idea is the next move, right? So if this is down right here, and the current move is up, and we know it's not going to the moon, then we build a position to take advantage of the next move. And that's the key right there. That's all we do, right? We expect the next move to pay. And so we are postponing this gratification by selling when things are going up, right? When it's the most scary, the scariest, that's when we do the best work. When everybody else is pooping their pants, we are closing our trades with money, right? Just like we did a second ago, just now, again. Right? So ultimately, this works, right? We've had 1, 2, 3, 4, 5, 6. We've had 6 winning trades so far. You know, they don't have to be huge. They just have to be consistent. They have to be repetitive. They have to be managed. These are not random events happening in my favor. This is me setting up the stage to execute on a probable outcome. Comma. If I can see another little green nub in there, I'll take that trade. A little bit of a green candle. Right? Remember, we're getting paid because of this, right? The next move, the current move, right? That's part of a circadian rhythm. It's part of that pullback that I expected, I anticipated, I built into it. I'm wanting this uh, to behave a certain way, and I'm exploiting that behavior, right? As soon as I see something opposite or different or awkward or weird, I know I'm now in fix it mode, right? It's not no longer going to be a race for cash, it's going to be a race for the exit. Right? So those green candles are not coming. I'm still waiting for an opportunity to click. Right? When we follow the rules, over trading is difficult, especially when we try to commit to the time. Right, this 2 hours per day, it really limits the over trading that we can get into by committing to the rule instead. Right, so we've had 1, 2, 3, 4, 5, 6 winners, and we have 1, 2, 3, 4 open trades from today. And we've built a short position looking for a target between 830 and 760. All right, so think of it as multitasking, right? We're running a portion of our book, a portion of our risk capital is allocated to swing trades because we see the opportunity for lower lows in a day or so. And at the same time, we can profit generating a small repeatable cash flow daily to help compound the account. Right. So the daily trading, the 3 pips, 3 pips, 3 pips, that's the objective. That's what I'm here for. The swing trading that I end up getting myself into is because I'm an opportunist and I see a plausible trade that's worth, uh, allocating 36 pips if I'm about to make 90 or 100, like 3 to 1, right? So if I can envision this, if I can see it, and yeah, okay, it makes sense, the probabilities are there. It's not because the 3 to 1 makes sense, it's because I see the risk of risking 36 is worth it. All right, so it's more about managing that 36 pips. Is it worth it to put that money at risk over time? And that's the position that we built, right? Over time, this will pay, right? We have purposefully postponed gratification, right? So we did that on purpose. As such, we have to still make money. And so that's where the green candle comes in. That's where selling on green for 3 pips makes a lot of sense, right? If I can generate a little bit of cash flow, there's a million things you can do. This idea of intertwining two strategies, that's really, that's the beauty of this method, right? This 3 pips, 3 pips, you're in and out faster than you can blink an eye most times. I just took another trade right there. And so we're hoping to close these trades here in the next, 45 minutes or so. All right, so green candle pushing into resistance. This is where I sell. And I'm not selling, $1 million worth, right? This is a micro lot. Yeah, most times that's exactly it, right? It's all about probabilities. There's no certainty here. There's no certainty in anything, and we expect it. Our brain wants certainty. Our brain is looking for this. Our society expects certainty, right? You're not allowed to make mistakes in real life. And in trading, that's all we do. We make mistakes all day, but we also know how to resolve our own issues. We don't rely on other people. We fix our own problems. If I got into it, I'll get out of it. And sometimes it will cost. And the idea is to make it cost as little as possible, right? It's okay to make mistakes, but it's not okay to stay in it. I need it to go up there. Right? If I can see green near that line here, that would be worth selling. I'm just gonna have a little bit of patience. Push up. Right? We just don't know exactly what those levels are, so we have to look left. We have to approximate, if is this a useful level? To me that looks important. Right? So that is where I would want to take a trade. And then when I repeat the same process over here, this looks important. And then if I repeat the process here, this looks important. Ultimately, we have the top, right? But ideally, what you're looking for is consistency. And, by not changing your approach, by not changing what you use for reference, it becomes static. It becomes part of your process. Almost at the top of the hour, pushing lower as expected. Right, so I'm gonna have to let you guys go, but ideally, we want to be selling resistance, looking for a lower low on the day. Another couple hours. Support should be somewhere near 0830. By the time we get to 0830, we want to be thinking about maybe buying our way back up, right? We'll have to see how it behaves there. And back up may not be back to the 61% where we came from, right? So let's zoom into an hourly chart very quickly, right? So if we find our way towards 0830, right around here. This will be a decision point. We're going to build a long, not because we're going back to the moon, but because we're going to go back and retest resistance. Everybody else at this level right here will be going short, 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 short to go here, right? So there's a two-way street coming. We just have to wait and see who's going to be the driver, the dominant bias when we get here. And this will probably be Thursday, Wednesday, Thursday. That's kind of the way I'm looking at it. Okay, so we have to see what the news will do to us. And we've looked at the calendar. We understand it's jam packed full of European stuff. We have a ton of US news on Wednesday, Thursday. So we have to expect volatility, but I don't think it's today. Okay, so play safe, play nice, short at resistance, and don't expect this to break world records. We're going to be news dependent this whole week. And last week of the month, always, always very volatile. There's a bunch of flow coming through. Expect that to be the main driver. Okay, be careful. I'll see you guys tomorrow morning. Bye bye.